Good afternoon. We're pleased to have another video conference for Randon companies. We're going to present our guidance for 2023, released by a significant fact. We have our CEO, Sergio Carvalho, CFO, Paulo Pigolato, Chief Financial Officer, Esteban Angeletti. And so before we get started, I'd like to remind you that the information that we'll address during this conference are not guarantees of performance and involve risks and uncertainties because they involve future events. Therefore, they depend on circumstances that may or may not come to fruition. The video conference is being recorded and has simultaneous translation to English and in sign language. If you want to interpretation, you can go to the interpretation icon. We'll at the end have question and answer sessions. So if you'd like to go ahead and list your name, just click on the Q&A button and follow the regular procedures, placing your name, company name, and the question. If you'd like to write it, if you don't, just give your company name and we'll call you to make a question audibly. Esteban, please give your presentation. Thank you, David. Thank you, everyone who's accompanying this video conference for us to talk about guidance. I'd like to start with some forecasts and some projections of the companies and some numbers that support this. We want to also give time for Q&A, so I'm going to be very brief in this presentation. As you can see, we continue our practice of having the 4 guidance indicators with a value interval for each one. So consolidated net revenue, the expectation goes from 10.5 billion to 12 billion reais. The revenue for the foreign market, exports, and what is produced by our plants abroad. So the net results have an expectation of $520 to $570 million, and our EBITDA margin is between 13% and 16%. And our investments regarding investments that are organic, not including M&As or capital mergers, between 340 and 370 million reais for the 12 months of 2023. When we go to consolidated net revenue, this includes intercompany revenue. We have a history of the last 5 years, a CAGR of 27%. Our expectation for revenue for this year is 10.5 to 12 billion reais, even with a falling domestic market. And we can talk about that in a bit, but what supports this estimate and this interval of revenue values is based on 4 pillars: a strong agribusiness here in the domestic market, continuing international expansion, either through exports or through manufacturing in new geographies, the diversification of portfolios of the portfolio, and also the growth in replacement parts, spare parts market, which is strategic for opening new growth pathways. Remembering that this interview of values does not include new M&As. It includes the M&As that have already been announced, Tech and ATP, but they do not include new M&As that have not been announced this year, including revenue of the foreign market. We want this to accelerate growth. CAGR was around 10% in the last 5 years. The expectation or forecast for this year is around 520 to 570, supported by recent movements in the United States with the acquisition of Hercules and new requests for exports to the US. This shown consistent demand in South America, which is our largest export market, and continuing expansion of business in new geographies, new regions, as announced by Fras-le with the acquisition of Judatech. When we look at EBITDA, adjusted EBITDA margin, it's worth making a comment. This margin is adjusted by non-reoccurring effects, especially in 2020, when the company recorded a gain from a tax process. So we remove this non-recurring value. The idea is to show a margin from operations. You have here in the history of the last 5 years, and the expectation for this year is the margin be between 13 and 16%. This margin is supported by the continuity of adequate pricification, and market volumes, whether it be in the domestic or foreign market, and a belief that in the next months we'll have lower cost inflation in raw materials, acquisition or collection of synergies of the companies which we purchased, those considered in the business case. We've shown a good track record in the last several years, and the idea is for us to continue to collect these synergies, especially in the more recently acquired companies. Gains in operational efficiency, which we've been working every month to be able to increase the efficiency of our operation, whether it be in manufacturing or our management, reducing fixed costs. And of course, we need to mention that there are market uncertainties for the second half of the year. And we can mention this in the question and answer session. So when it comes to investments, we're talking about organic investments, the CapEx for maintenance and capacity expansion of current business, not including mergers or non-organic acquisitions and mergers. We looking at an amount very close to what we had last year, between 340 and 370 million reais. This investment will be more destined towards maintenance and asset conservation, and an increase in efficiency and productivity. It's increasingly difficult to say what maintenance is. Every time we go maintain an asset, we take advantage of that to see if it can be substituted for new equipment that's more efficient, that would reduce operational costs, or have greater output in relation to its predecessor. So very briefly, these are the forecasts for the company, the premises that support each of these forecasts. So now I give this to David to coordinate question and answers. Thank you, Esteban. We have the screen here for those who want to participate in the Q&A. We have some people are already online. We'll start calling the names briefly. I'd like to give you an invitation to the ESG Ambition event, April 28th. We will be sending reinforcements throughout the week, so please pay attention to this communication so you can participate and see an update on the sustainability of Randon companies. When it comes to questions and answers, the first question is from Lucas Marchiotti of BTG. Please feel free to open your mic and ask the question. Hello, people. My question is about the CapEx program. Can you, in some way, give a bit more granularity regarding Randon as a holding, what's going to auto parts, what's going to OEM, and the other divisions, what might be going to each of the subsidiaries? Suspensys has a new factory to be inaugurated in Mexico. We had a recent program for Suspensys in the Caxias plant. Fras-le has expansion to be done in Caxias as well. So could you explain how capital will be allocated between the divisions and the subsidiaries? This would help us understand the CapEx for the year. That's my question. Thank you. Thank you, Lucas, for your participation and for the question. I want to forward this question to Sergio. But I want to quickly first say that we have a very specific division of the cash flow for each of the verticals. And we don't have how to choose exact timing that's most appropriate. We take advantage of opportunities and according to the availability of this equipment for us to continue our maintenance plan, our CapEx plan. Sometimes there are demands from our customers and we must adapt the CapEx plan to be able to maintain the supply or to expand the supply to the customers. And this makes us review this quarterly. I think there are two other elements that I would add before I give the floor to Sergio. One thing is certain. When we do an investment analysis or a yield analysis for an investment, we look at our leverage with the goal of remaining 1 times EBITDA. And looking at the points we consider for investments, especially in a year such as this, where we have a domestic scenario that's a bit more delicate. We also do quarterly reviews for investment, where we want to calibrate this with the reality we see in the market. The idea not being disconnected from our production from our demand. Sergio, Paulo, please feel free to add anything. Thank you, Esteban. Lucas, thank you for your question. Esteban already addressed it well. In general, we have a CapEx distribution depending on the cash generation potential for each unit. But we can say that some, like Frasley, they have greater availability because of this. We have very important projects that we've mentioned in the past. The OEMs with their modular platforms are involved in this development, which is relevant for the future. Our spare parts invest in balancines, and we're going to put balancines in a condition to operate. To be able to go along with our strategic plans, investing in increased capacity. And so all units have plans, strategic plans that are important to us. That are scheduled for this year. Thank you, Sergio. Lucas, I hope I heard you understood. Thank you. I'm going to go on to the next question from Victor Mizusaki. Victor, please feel free to ask a question. Folks, I have two questions. The first, when we look at the guidance, I think two things drew our attention. The first is regarding revenue. There's a scenario there of revenue drop in the counter year. My first question is, what should we monitor to see if this scenario comes to pass? Is it auto parts or is it OEM? And when we look at EBITDA margin, we have 16%. So how much of this depends on price recovery for implements? Thank you, Victor, for accompanying us and for the question. I want to share this with Sergio and Paulo. Please feel free. Talk about margins, EBITDA margin. What we have in the market, the two shadows that we monitor are the truck production and the demand for highway equipment. These are connected by public data that we see in the factory. Finabravi also. We see this mismatch between production and licensing. Licensing has had interesting volume while production has suffered a bit more with the transition Euro 6 from 5 to 6. So this combination of scenarios, worst case may be where we have the scenarios for trailers and truck production worse than what the associations are suggesting, and the foreign market would not be strong enough to make up for this drop. Sergio, you can talk about this scenario and we can talk about EBITDA margin, both at pricing and cost. Victor, thank you for the question. What to monitor? The sale of trucks is one of the relevant indicators. Industry produced 94% of everything that was sold in the end of the quarter. Only 6% of sales were trucks. The monitoring of these sales is fundamental. And it can be that large increases happened in the cost of these products. And the transporter has to make their decisions facing this situation. We know that prices are becoming accommodated, but we need to see movement with more substantial sales associated with Euro 6. I think another point to monitor is the availability of credit in the market. Several commercial banks have limited their attention for this segment. This is something else for us. It must be monitored and associated with the interest rates. We've had no movement in this regard, and we hope that in a few months something positive will happen. But we think for the first quarter we won't have the concerns, as Steban mentioned, for the second half of the year. Thank you, Sergio. Paulo, regarding margins, can I give you the floor? Thank you, Vitor. Thank you, everyone, for participating in the event today. I think we maintained the EBITDA margin range similar to what we had the previous year. What do we see that's dynamic? We see that there's less pressure in terms of raw material inflation. And as we communicated in other events, there's been some deflation, especially regarding steel in relation to December of last year. And this can mean, depending on the dynamic of the competition in each of the vertices, maintenance of margin that's better in regarding in regard to what we had in the previous fiscal year. Beyond this, what can affect this is the fact that we are tireless regarding the search for productivity gains in all our operations, even in support and administrative areas. In other words, this brings some positive surprises for EBITDA margin. This range has to consider certain factors. Uncertainty regarding the second half of the year, regarding the dynamic to maintain raw materials, the exchange rate. We're working on an exchange rate of 5.30, sometimes last year even higher than that. And then we see the real appreciating to below 5 and now regaining around 5.05, 5.10. All this regarding the larger volumes of exports, which can cause an impact. In general, this is an explanation for this range for the EBITDA margin. I wanted to comment a few things that could bring it around 15, 16 and some other points that might pressure the margin to go beneath that. Great, thank you. Now moving on to the next voice question. Lucas of XP, please feel free to open your mic and ask the question. Good evening, everyone. Thank you for the transparency and the information. I have two questions. And I wanted to get some more details with you regarding this combination of revenue and margin. I think that it was very clear looking at revenue, what the main drivers are to maintain or grow in comparison to last year. But I want to look at how you see this evolution. We're starting with the first quarter with 2.6 billion revenue in the first quarter already reported. And I'd like to understand your premise for the evolution between the second and the fourth quarter. Will the second quarter be more pressured with some OEMs having some stoppages? Or can we see some of this growth in the second quarter in relation to the first? So I just want to understand how this will evolve. And regarding costs, Paulo explored in his previous question, but just to understand a little bit better and to make sure that I'm clear when it comes to inflation of raw materials, looking at this base margin scenario, which would show stability in relation to last year. Could you maintain this steel price, or do you already plan for an increase throughout the year? That wasn't very clear to me. I'd like to explore that regarding the price of steel, which is very significant to the cost price. Those are the main issues. Thank you, folks. Thank you, Lucas. I'd like to share that regarding net revenue, what I can say, and Sergio feels free to compliment. In our planning, in our budgeting, in our forecasts, Lucas, we were considering first quarter impacted by smaller volumes because of the transition, which Sergio mentioned in the previous question. And answer the transition from Euro 5 to Euro 6. We have the OEMs working full steam till the end of the year, not making the usual stoppages in December. They ended up forwarding these to or postponing these to January. So this had a positive effect on our spare parts. We thought this would happen in the first quarter. We saw the volume of truck production fell during the first quarter. And so now we're monitoring this dynamic of truck production for the second quarter. We've seen some comments regarding plant stoppages in the second quarter. So we want to see how we can mitigate this via other initiatives. Remembering that for our auto parts, a third of our revenue regarding truck production is invested consistently in the expansion of capacity through new products in our portfolio. All the recent acquisitions of Caster Tech were geared towards equipment to supply parts for agricultural machinery. And we want to increase participation of our auto parts in the replacement parts market. This is something which we've built over the last years. And our foundry, Caster Tech, 30% of what they sell, they don't have the capacity, the production capacity. This is a strategic decision. We ended up outsourcing this production with other suppliers. And we do when the market is down is we get this 30% and try to internalize it in our foundry, and our revenue stays stable, and we bring margin in-house, which used to remain with our supplier. These are things that we have to mitigate this variation in revenue. Sergio, please feel free to add. Lucas, thank you for your question. Stibben already stated it well. I just like to reiterate the strength of our diversified business model. A drop in production expected is very substantial. Despite this, we had communicated our forecast for revenue reduction regarding trucks and trailers and semi-trailers. But we have growth on the other side. We're facing a significant drop in volume that was expected, and our guidance still points out positive numbers for the year, which shows the resilience of the business model which we have and which we built and which we want to optimize within the Hyundai companies. Thank you, Sergio. Lucas, in regards to your second question regarding margin, obviously we've monitored the main ends, both cost and price. This has to do with market volume. We know that in our implement business, the less the volume, the greater the tendency for a price increase. You can see that the volume of implements did not have a significant drop in the first quarter, and this has helped maintain the price stable in opposition to last year. That's why we want to keep this guidance of 13 to 16%. Paulo, if you'd like to comment on cost, I think it'd be interesting for you to talk about steel. Lucas, thank you for your question. Thank you for your participation. We often comment. It's important to talk about our intelligence and the dynamic regarding steel purchases. First, we buy steel centralized manner. The supply team accompanies the dynamics of this market, not just in Brazil, but globally. Currently, news suggests that iron ore dropped to levels that haven't been seen since December due to lower demand from China. And we know that pricing dynamics in Brazil are directly related, especially the cost of the plants for coal and iron ore. This dynamic is very volatile. And connected to this is the expectation for volume due to with the plants regarding the second semester, the second half of the year. So I'd like to reemphasize that regarding the first half of the year, we've already announced that we had deflation of steel. We're monitoring this very periodically. We can have a positive surprise regarding our third quarter, which should be more or less maintenance regarding these levels, or potentially a slight increase, but it's still early to affirm a position regarding the last 4 months of the year, because this is a dynamic that we'll monitor, and we hope that we can maintain these prices, but we can't state categorically that we'll be able to. This will depend on the price of iron ore, the price of coal, and expectations regarding volumes in the internal market, domestic market. Great, thank you for the answers. I apologize, Paulo and Stable. When it comes to revenue in our segment, the second and third quarters are historically stronger. Talking about the number mentioned, the second and third quarters are historically stronger. It's worth remembering. Thank you, Lucas. We'll now move on to the next question. Andre Mazzini of Citi, please ask your question. Hi, everyone. Thank you for the call. My question is about the foreign market. We saw in Mercosul lost some share versus last year. USMCA gained share. And we think this should continue with Hercules with a full year in 23. So will this continue, increase share? There's a discussion about Argentina wanting to be in foreign markets with stronger currencies. So tell us a little bit about Asia. The Brazilian government went to China trying to straighten relationships. The market is at the frontier of mobility. So can Asia have something promising? Thank you. Thank you, Andrea, for your question. Great topics for us to address. Thank you for the participation in our conference. I'd like to take this moment Andressa, who wrote us a question very connected to your question. What are the main indicators that we can monitor or should be able to monitor the foreign market regarding revenue, load guidance, and how can it contribute to this margin? So combining these questions, I'd like to use this to talk about some facts and data that we have from Hercules. You're certainly the most appropriate person to talk about this market, SMCC, and the Asian market. So regarding Hercules, we announced the completion of this transaction last year when we consolidated Hercules results. Compared to this year, we have only 2 consolidated months from November to December versus 12 full months of consolidated Hercules in 2023. The dynamics of the American market are very different than the Brazilian market. We have there an excess of demand with a lack of supply. Biden overtaxed Chinese products by over 200%. So there was a huge opportunity for those who are already there, like Hercules, as well as Latin American manufacturers like Randon, to begin to offer exports via Brazil. And we have entered the American market on these 2 fronts. Remember that Hercules has a capacity for 5,000 semi-trailers a year. And we have the portfolio almost entirely sold for the year. We're able to put in volume and price, and this has helped the margins and results of the OEM in Brazil. This kind of makes up for the domestic scenario. On the other hand, what we've been able to do in Brazil is to increase exports to North America with an expectation of a return to becoming one of the largest markets for exporting revenue for Brazil. Also, the second largest destination for exports are the Mercosur countries, especially Argentina, Uruguay, Paraguay, and Chile, which have a agribusiness dynamic which is similar to ours. They're some of the main customers of our exports, and so we believe that demand will continue to remain strong since the expectations for the harvests are positive. Sergio, please feel free to explore the United States and Asia further. I ended up not mentioning Asia, but we have Frosley operation there for a while, and you can certainly talk more about the Asian market. Sergio, you're on mute. I apologize. Andrea, thank you. I think Stenani explored this. We've had some retraction in some South American markets, Chile, Argentina, especially, but more than making up in the American market. There are segments in the American market where we see signs of cooling off, but this is not the case in the segment where we are. And this is part of why we made the acquisition. This is only confirming that our investment thesis was correct, and when everything is going well, the results are consistent. The production is operating like a Swiss watch. We're very happy with the transformation at Hercules. And now we're looking for other mechanisms to accelerate our exports. So the US is doing well and will help us considerably this year. China, on the other hand, our main operations is through Frosley. This is going very well. And in China, we have new business with more attention in the Innisco market in China. There are various initiatives, more and more associated to brake pads for heavy vehicles. This is what we produce in these countries. And these initiatives are going very well. Along with this, we believe that at this time, it's not where our best opportunities are as we resolve some capacity problems. We have this American market with huge potential to grow in Hundong companies in the so there's a lot of opportunity, a lot of units have invested in order to get rid of bottlenecks so that we can increase our exports. Thank you, Sergio. The question is from Fernando Leitão da Cunha. Please feel free to ask your question. Fernando, can you hear us? Yes. Yes, now we can hear you. Good evening, everyone. Congratulations. The first is regarding Hundong Bank. With this increase in interest rates, was there any movement of default for bank clients? And regarding competition in the domestic market, we've seen that Hundong doesn't want and isn't entering the price war. And because of this, in the last fiscal years, we've seen a small drop of market share. We have some new or reborn brands that are fighting with Hundong. So people are needing to sell. What will be the posture of Hundong regarding this almost price war? Thank you. Thank you, Fernando, for your participation. These are interesting points to explore, especially regarding market share. I'd like to add a question from Gabriel Rezende. Gabriel, thank you for being with us. He comments, what's the market share intrinsic in this guidance? I'd like to quickly talk about market share. Then I'll split up the question, Banco Rondon with Paulo, who can explore some of the details in the financial services arm. Fernando, when it comes to market share, our implement vertice is about 1/3 of the revenue. The other 2/3 come from other vertices and other products and geographies. But it is important vertice where we carry the Hundong name in our implements. We have market share of 30-35%. Sometimes we reach 40%. And sometimes, depending on the market dynamics, we're below 30%. In the short term, with the analogy of value intervals that we had with guidance, we want to have in highway implements around 30-35%. Of course, we're always seeking market share, balancing that with profitability. We have this for all the divisions and all the areas of the company where we can balance these things. It does no good to have volume and be the market leaders if we don't have profitability. We can't just focus on profitability if we don't have volume to reduce fixed costs. Paulo, would you like to add anything about market share? Yes, Esteban. Yes, I'd like to just remind everyone that in the highway implement segments or truck trailer segment, there's a lot of products, and this market share considers a product that you could sell for 100, for example, and when you sell at 300 for a unit. So traditionally, if we're going to calculate the market share value, our market share would be considerably larger than what's reported. So our objective was and always has been to have more added value in segments that we believe are strategic, and we traditionally focus less on products where there's little added value. So there's a big distinction between a heavy truck, a small truck delivers in the city. There's a difference in value that's quite significant. When we talk about market share, we want to go after the money where the money is. Thank you, Sergio. Paulo, do you want to talk about the Randon Bank? They have a credit analysis characteristic, in our opinion, that's superior. We're knowing customers for a long time. These are corporate clients who have greater resilience than individuals. They have greater pressure due to the interest rate and the cost of financing. But Paulo, please feel free to share. Fernando, thank you for the question and your participation. Randon Bank has an important role in the industrial sector, and we've been growing organically. Regarding the capital of the bank, and so before I comment about more specifics within the rating agencies and their criteria, the most known rating agencies, the portfolio of the bank is within the excellent criteria. The bank has a very nice portfolio, and we have not seen over the last several months any isolated fact in terms of creating concern regarding this portfolio. The default rates are quite low, and they're historical levels. Great, folks. Thank you very much. Thank you, Fernando. Davi. Let's go to our final questions. I want to consolidate some of the 3 questions. 2 from Jonathan of JP Morgan and 1 from João Paulo from Capital. And others we'll answer later, but they'll all be answered. But the first and second by Jonathan is regarding the foreign revenue. They should make up about a quarter of the revenue, comparison to 13% in 2022. And also regarding our desire to reach 30% over the medium term. Second question, guidance. Is there any plan of recession in the US or specific growth related grain produced in Brazil? This is the question regarding the representativeness of foreign revenue. And also the last question by João wants us to talk about all this within guidance. Thank you, Davi, Jonathan, João. Thanks for following the call. Sergio, I think you can comment about the growth in the foreign market in the short and medium term regarding the new revenue. Paulo can comment. Sergio, maybe you can talk about Naiwana. It'd be great for us to share these details with our listeners. Sure. Thank you for the questions. I think that your evaluation is very well aligned in the sense that our expectation is for growth in the revenue percentage from abroad in the consolidated statement. I think that there'll be growth regarding what we had in 2022. As we already said, this is part of our strategic vision. We have several activities, whether they be for sales of Brazilian products, auto parts, expansion of our OEM division, Crosley and the American market continues to develop new business. We had heavy investment in a production line for heavy disc brakes in Crosley operations in Alabama, made in USA. We won a lot of business, and there may be another order coming. We've just started the operation this month for this new production. And people are already looking into new future investments, whether it be organic or whether it be non-organic. We have intentions to emphasize the American market in our strategies. Thank you, Sergio. Two observations. One, regarding 13% of the foreign market revenue for the foreign market. This 13% is more regarding production and manufacturing in our plants abroad. When we look at all our revenue in the foreign market, including exports from Brazil, the consolidated of last year is around 20%. So effectively, we should see this growth looking at the number of 20% and moving towards a quarter. And a final point about a premise of recession in the American market, I'd like to comment that the market, as I mentioned previously, the implement market is acting differently because there's demand without supply. So despite the recession, we believe that it won't be so harsh as to affect the demand, which is not being met currently. So Sergio, would you like to talk about Nai1? And then we can share with Paulo about Adiante. We continue very positive regarding Nai1. And in 2023, we're already having more consistent results with more consistent portfolio of orders, and the initiatives which we mentioned in the previous call, they continue to be valid, with certain projects working more quickly than others. But Nai1 will make a huge difference. Yes. This will be the first year where we have a contribution by Nai1 that's consistent for our results. Even though in its initial contribution, we need to crawl before we walk, walk before we run. This is one of our startups. Paulo, please feel free to comment about this. Jonathan, thank you for your questions. It's always worth mentioning that the objective of releasing guidance and its evolution in relation to last year. Last year we had guidance with full ranges, but this is to demonstrate some certainties on one side and some uncertainties and market volatility. But regardless of anything, it's the wealth of our portfolio. We're always saying that we're increasingly resilient because of the strategic decisions we took in the past and continue taking. We can't anticipate this here, but we'd like to report our results for the first quarter. And what is coming is that if it's sometime over the next months, we feel that guidance is not reflecting the best information we have, it's our duty to update the guidance. So today, this guidance reflects the best information that we have for the horizon of the next several months. Agianci is a 50-50 partnership between Randon and Gerdau. We will not consolidate the results of Agianci in our results, nor will Gerdau, considering this type of partnership. The results of Agianci will impact our EBITDA. It's the first year of operations. We know that an operation in its first year often has more costs impacting the results than the revenue. But what we can anticipate is that the Agianci team, Fabio, who's the CEO, he's doing a great job. And the dynamics in interest rates, higher interest rates, end up creating opportunities, additional opportunities for equipment. We are related to the wealth of our portfolio, and it's possible that we'll have surprises that are positive in relation to the business case. We will be updating the market as we release our quarterly results. Agianci is considered in our guidance, impacting our EBITDA margin. Thank you. So finishing up our question and answer sessions, I'd like to give the floor to Sergio for him to make the final comments. Once again, I'd like to thank you all for your participation and your support, and say that this team that we have here for investor relations are available to answer questions. Once again, thank you. Have a good evening. Thank you all. Have a good evening. Good evening.